Good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 643rd video, baby. Yeah. 642 other videos just like this one, crammed with technical analysis lessons to help you become a better analyst. Traders, I'm almost 29 years deep at this. The lessons I give you are hard-learned. Make sure you watch these videos. Traders, before we go any further, do not forget that futures trading is risky and can cause substantial financial loss. Futures trading is not suitable for every trading account, and a lot of people lose a lot of money doing this, so be careful if you're going to play this game. Traders, for you traders out there that have been following the S&P, let me start with this. This video is being filmed on Thursday night for Trading Friday. That would be 10/15/2010. Traders, the last two videos I gave you was the weekend webinar, and it was completely bullish. And then on Tuesday, we gave you another video, which was completely bullish, and we are still bullish. I am giving you another bullish video tonight, much to my surprise, but not really, because I follow the analysis, and the analysis isn't wrong, or it doesn't point you in the wrong direction. So it's pointing up. I can agree with that. The world out there, I get letters and comments by the dozens, more than the dozens. Everyone's telling me about the government, Bernanke, what's going on, printing the dollars. Oh my God, price of gold, dollars going down. It's the end of the world. You know what, traders? This market is going up. While it's going up, you got a bull market to trade. Call it a bubble, call it what you will. If you are a technical analyst and a trader, you don't care what the reasoning is for the move. Traders, here's something I tried to explain in my chat room, trading room today. What we have witnessed in the past 2 years is completely unprecedented. It has never been seen before. The government has never had to do this. Nobody knows what the result will be. Will it make us go higher? Will it fix the economy? Will we have another big crash? There is no way for you to know what the end result of what the Fed is doing now and what the government has done for the past 2 years. Why? Because it's never happened before, and we have no firm results to look back on. So all you traders with all these insane ideas that you're writing to me every day and telling me why the economy has to crumble, put your goggles on and look at those charts. It is not crumbling now. Worry about it when it starts to crumble. I hear cries from everybody that this is the end of the world coming. The NASDAQ, the FTSE, the DAX, three world-leading markets. Do you know where they are now, traders? They're all at fresh year highs, every one of them. Fresh year highs. You do not make fresh year highs in a market that's dropping. You do not make fresh yearly highs in a market that's bearish. For whatever the reason is, and I don't care, Fed bubble, who cares what you want to call it, this thing is bullish, and you as a trader should just follow it up and stop trying to play chief economist, because how could you be wise enough, you personally, I'm talking to you, the person in the camera watching me right now, that thinks they have all these economics figured out? It is not possible. I don't think Bernanke's got it figured out. I don't think Paulson had it figured out. I don't think Timmy's got it figured out. And I don't think Greenspan was able to figure it out, because it's impossible to know what the result will be. We've never seen this before. So you got to stop believing in your own theories, traders, and trade what's happening on those charts. I kid you not, that's where the trail is. Now, traders, I noticed on Saturday, or I should say Sunday last week, the weekend webinar, that this thing became wildly bullish. I have been behind the eight ball all week long. I have not been able to catch this market. It just keeps going without me. But I am going to do my best to get it tonight, Thursday night through Friday, because I don't mind calling a market. I cannot stand calling a market and then letting it get away from me. So we'll see what happens there. Anyway, traders, this is bullish. When you have NASDAQ, FTSE, DAX making yearly highs all time for the year, you can't fight that, traders. You got to go with what you see. Now, I have a chart segment that I am going to show you in a couple of moments, traders. The chart that I love the most, I will show to you. I think that this chart will speak volumes for the traders who are bullish or bearish. I think you are going to love this chart. I have many charts to show you, but one in particular you are going to like. It is a comparison of the dollar and the stock market. And when I show that to you, I think you will understand that you can't think anything right now but bullish. Okay, so traders, I don't think I want to discuss anything else. So with no further ado, my chart segment. I like that. Hey, very nice catch on that. Traders, you know that sound. It is viewer mail time. Comment, question, ask Oscar the question of the day. And this question comes to us from a dear friend of mine, Wayne P. from Connecticut. Wayne, you are like a 20 to 25-year Omniac. I mean, wow. What can I say? I've known Wayne for a long time, and exactly in the capacity of me being broker, trader, advisor, and him being a trader on the other end. So, hey, Wayne, thank you for being an Omniac. Thank you for still hanging with me. And let's see what you got. Nice call for pulling up Wayne's email. I told him I was going to use it, so. Wayne, that was a coincidence. I told him I was going to use your email. He chose yours today. Very nice.
What are you doing?
Oh, my God. I opened the envelope. I didn't even give it a thought. Oh, you're out today. Whatever you were going to give me to open that envelope with. All right, you might as well give it to me. What is it? Oh, a picture. Let me see. What is it? It's a picture of Marilyn Monroe. You were going to give it. Oh, I love her. Can I just kiss her for a few minutes? A picture of Marilyn he was going to give me to open up your envelope with, Wayne. That's pretty cool. I love her. Well, Mikey, sorry. We'll try this again. I kind of blew that. All right, Wayne, let's see what you got. The comment question of the day from Wayne. Wayne says, Oscar, I know you are quite the technical analyst, as you have proven here for the past 360 some odd videos. Mr. Wayne, you missed a few. 643, baby. We're getting there, but thank you so much. And we appreciate it. Well, thank you, Wayne. My question to you is, why do you only use bar charts and not Japanese candlesticks, as that seems to be the new rage? Keep up the great work, Wayne from Connecticut. Well, Wayne from Connecticut, Wayne P., first of all, thank you for your question. Very good question. Why don't I use Japanese candlesticks? Well, Wayne, interestingly enough, from 1982 to about 1993, 94, I used candlesticks more so than bar charts. In fact, I used point and figure before there were computers. And then once computers came out, I started using Japanese candlesticks. And you know what? About 1992-ish, a group, and I won't mention their names, a group out of California contacts me and says, Oscar, you know, we've been following you for a long time. Back then I used to send my work out by fax and blah, blah, blah. But we've been following you a long time. We'd love for you to help us out with something. We're building a program called the Candlestick Forecaster, and what we are going to do with this program is it's going to put up a chart, and it's going to tell you every formation and what it means. It's not telling you where to buy or sell. It's telling you what the formation means as an aid to people who are trying to use candlesticks to trade. And I said, you know what, guys? I'm really, really versed in candlesticks. I can do that for you. And I spent 9, maybe 10 months that year. And I put down every single pattern that I've ever studied, could remember, or looked up in books going through the candlesticks. And you know what happened, traders? Right when I was done with my studies, I called my buddies back and I said, guys, a development has taken place. I will never use Japanese candlesticks again to forecast the market. And I refused to help them with that program, and I quit using candlesticks. And here is why. What I realized was, are you kidding me with these candlesticks? Is it a hammer? Is it a doji? Is a double doji a sell signal or a buy signal? Worse than that. If you have one bar or one candle, it's got a meaning. You put another one next to it, it's got a different meaning. You put a third one next to it, it might have meant something else. So you get involved on one candlestick, you think it's a bullish one, it starts to go down, you get smacked for 2 days, and then you can sit back and go, oh, I didn't realize it was actually a 3-day pattern. Well, you know what? That's as useless as counting Elliott waves, in my opinion. That is what I found out, because how could you possibly know that was a 3-day formation you should have been waiting for when the first one has a signal on its own? And then when you create the second bar, or the next day, it's got a signal with the first bar, and it might be something completely different than what the 3 bars are going to tell you. Wrong. How can anyone decipher that? I think it's so open to suggestion, it's so subjective, that there is no way to call it correctly every night. Understand what I'm trying to say? If you see a 1-candle formation and trade it, and then you can figure out what you did wrong 2 days later because the 2 more candles tell you it wasn't what you thought it was, well, isn't that useless? A bar, Wayne, I put up a bar, it's got a high, a low, a settlement, and that's it. It tells you if it's a swing day, if it's an outside day, if it's an inside day. It tells you what it is, and that's that. There's no guesswork. So with all the difficult work that we have to do with indicators and news and watching markets, intermarket analysis, shouldn't you at least know what kind of bar you have right off the bat before you start your homework that evening? Yes, in my opinion. So, Wayne, I don't use candlesticks. I have found that they'll confuse just about anybody. I bet the Japanese are confused by them as well. So, that's my answer to you, Wayne. Thank you so much for asking. Anybody who wants to differ on that opinion and could teach me how simple candlesticks are, please go for it. I'll be here. All right, traders, with no further ado, let's go look at some charts. Okay, traders, before I show you the graphs themselves, the actual bar charts, I want you to notice something, the indicators. Bearish as can be. Pinned, overbought, and pointing down. The CCI, Commodity Channel Index, this is on the Dow Jones Transportation Average, the leader. Same thing with the MACD. Pinned, pointing down, bearish signal, right? Well, I told you last night to throw these indicators out the window. I shouldn't say last night, I told you in my last video. Throw these indicators out the window this week and just go with the formation, and I'm going to prove why that's the fact. This has been bearish looking the entire week, traders. It has not given a buy signal yet in the transports, those indicators, right? Let's go look at the S&P. The S&P indicators, the same nonsense. You have these indicators pointing straight down, the Commodity Channel Index pointing lower, and the MACD crossed over and is pointing lower. Those are sell signals, right? Again, I warned you to stay away from the indicators. They are not pointing in the right direction. Do you know why, traders? If you are a technical analyst that will just use indicators alone and not look at the bar chart structure, you're not paying attention, because look at what I'm about to show you right here. Would you want to be short that? Traders, this is the NASDAQ. It is the daily bar chart. It is above previous contract highs. Every day this week has brought a new high. Every day, a new high, new high, new high, new high, new high, new high here, and probably a new high is coming tomorrow inside of a parallel channel with bearish indicators. You have to go with formation over indicators on certain occasions. This market got bullish quickly. It got bullish before most analysts even seen it coming, and it got bullish before the indicators were even ready for it. So the indicators are going to take a week maybe to catch up to what this market is doing, but that is strong. Look at that. Would you want to be short that? Remember, you are at fresh new yearly highs on this chart. Let's look at the next chart, traders. That was the NASDAQ, certainly one of our leaders. Would you want to be short this? Absolutely one of our leaders. This is the Russell 2000. Look at this extremely constructive chart structure here. Does this look like a shorting opportunity to you? It does not look like a shorting opportunity to me. I would not tell my worst enemy to sell into that. Nobody should be selling that. Not yet. I mean, if the market should be sold, it would break down below this line and then start giving you some of this. But while we are in this pattern and moving higher, you throw those indicators out the window and you trade these patterns because they are bullish. That's your Russell. You've seen the NASDAQ. Let's move forward. Traders, the S&P, there is simply no arguing with that chart. You are just booming ahead. You are holding this formation. Every time you get near the parallel channel, you bounce off of it again. It is a follower. It's going to follow the Russell. It's going to follow the NASDAQ. It's going to make new yearly highs, just as its leaders are doing. Let's look at another chart here, traders. This chart is the FTSE. Traders, as I mentioned, the DAX, the FTSE, the NASDAQ, they are all above their previous yearly highs. They're all at fresh new yearly highs. Look at the beautiful construction that you have in this chart. This is the FTSE, the London Stock Market Index. 57.20 was previous highs for the year. 57.52.5 pegged last night, above previous highs for the year. Fresh new highs. Very, very strong market. Traders, look at this one, the Dow Jones Transportation Average. It's in a monstrous parallel channel. Monstrous. And it is now starting to climb very nicely and looks to me like it's going to take out previous yearly highs this month. We should probably take out these previous highs. So you should get fresh yearly highs in your transportation average. What does all of this mean? How could I convince you, traders, that the market has finally turned bullish and you can buy these dips safely? Well, I had to convince myself, of course, and I spent the last week and this week doing that. But I also did some in-depth analysis on the dollar versus the stock market, traders. Look at this next chart right here. This is a wonderful, wonderful chart. In fact, I kid you not, this chart absolutely should be on Bloomberg and CNBC tomorrow morning. Follow me on this, traders. The dollar index is the chart here in green. The S&P is the chart in blue. They are overlaid one over the other. On March 6th, 2009, the dollar index topped out on March 6, 2009. That very same week, in fact, on the same day, March 6, 2009, the S&P or the stock market bottomed out. As the dollar started to break down, the S&P had a 614-point rally. 614 points from 666 up to, 614 points. Over 600-point rally. From 666 up to 1220, traders. Up to 1220, over 600-point rally. Is that over 600 points? I keep saying that, but I haven't done any math. It's actually a little bit less. Sorry, traders. I'm getting carried away here. But in any event, you had an almost 600-point rally off of the dollar bottoming out. And the dollar cracked all the way to here. The S&P ran all the way to here. Well, on June 12th, 2010, this year, the S&P topped out, the dollar index topped out right there. 10 trading days later, a rally begins in the S&P at 1010. It goes all the way up to 1180 where we hit today. The rally started here. Dollar index topped here. 10 trading days later, we begin a rally. The last one, almost 600 points. Traders, this one is not over yet. The dollar index went from here, follow the line, all the way to here on the last drop. This dollar index is from here to here. You probably will drop further because the high here was higher than this high. So your low here will go lower than this low. So you got a long way to go in that dollar index, which is going to continue to push the stock market higher. Traders, this chart speaks volumes. It is a fantastic chart. Remember, once again, March 6, dollar index tops out. March 6, 2009, stock market bottoms out. June 12, 2010, dollar index tops out. 10 days later, stock market bottoms out and has been rallying ever since. That is a very, very strong indication that if the dollar continues on this path, undoubtedly the S&P continues higher. How much of the 600-point rally will we get from this one? I don't know. Maybe more. Who knows? Maybe half, maybe twice as much. Enjoy the rally while we're getting it. Great chart, traders. Next chart and last chart I'm going to show you, traders, is corn, and I'll show you why. The grains lately have certainly exploded, undoubtedly, and probably because the dollar is losing value, right? The main commodities that are traded, especially in Chicago, the main grains are soybeans, wheat, corn, and oats. Soybeans had a gap, and it dropped back down. It just about filled its gap, and there's almost no spot there at all. Very, very teeny gap left. Wheat had no gap at all. Oats had no gap at all. Look at the gap in corn. All the way down to 528 from where it is now in the 570s. There is a gap in corn from here down to 528. That gap, Follow me with this. Not a single gap on this chart anywhere. Nowhere. No gaps. If the dollar index has 1 or 2 up days at all, that gap gets filled. I think that the gap will get filled. Just something I wanted to point out to you grain traders out there. Take a look at your corn. I don't see any unfilled gaps. Let's see if they fill that gap. Traders, pull your own charts, do your own homework. Absolutely compare the dollar index to the S&P cash market, and you will see that when the dollar breaks, the stock market has tremendous rallies. Do your homework, traders, and I'll see you at the site. So, traders, you've seen those charts. There's my technical argument for why this thing stays bullish. Sorry about my crazy math before, but I just wasn't actually looking at those numbers. I was just talking to you about the charts. And you, sorry about the Maryland thing, Mike. I don't know what got into me, but hey, that was great what you were going to give me to use to open it with. I dig it. Traders, listen up. Lots going on here in these markets. Take a look. That corn chart I showed you only because soybeans basically filled its gap. Wheat had no gap. Oats had no gap. Why does corn have a gap? I don't know if that makes sense. Thought I'd show it to you grain traders out there. All right, traders, listen, I am going to get out of here in just a moment. Remember that we are now mobile traders. You can take your Omnis on the go. It's can't say it.
livewithoscar.com.
m.livewithoscar.com. It's our mobile site where you can follow the Omnis on the go, and certain phones can even follow our trading rooms on the go. Speaking of which, traders, don't trade alone. Come to our trading rooms where I am there to help you become a better trader. There are fantastic analysts and traders in those rooms. There are some loons too, but that's part of the course. That's, part of the course here. But lots of great traders in those rooms. So come on down and join us. Don't be bashful. Don't be shy. The room is free and everybody is invited. Is there anything else I should go over? Because, boy, oh boy, there's a lot of studying for this video. I want out of here.
How about chartupload.com?
Chartupload.com. I can do that for you, traders. Chartupload.com. It is a free service that we provide to you, and we would like for you to use that to upload charts into our trading room, into any other trading room where you may be in, or if you want to share charts with your friends, use chartupload.com. It's virus-free, and we protect it. Anything else before I go, Mr. Mike? Am I out of here? Phone number, 702-629-4755. Email, what do you want? My fingernail? You want SS number? What do you want? Anything else?
No, that's
all right,
it.
good. Then I'm out of here, traders. Keep your emotions out of this thing at all times. Do the best you can. Make sure your stops are in at all times. We all know a stop is your best friend. And try to keep your emotions out of this thing. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.